We've got a very dangerous setup on this chart, ladies and gents, and the reason we have this setup looking so bad right now is because Bitcoin is yet again, and this is now like the 5th time we've done this throughout this trend, is yet again coming back down into the very low range of the 60k area, and that means trouble. The reason that means trouble is because, again, we're always looking at the strength that we move up from our support levels. And if we start seeing that we've lost strength and that we quickly revisit our areas of support, that tells us the strongest possible, it's the strongest possible indication. It's literally the market's own body language showing us that it is getting weaker and it is running out of strength. This is something that we've spoken about a lot on the channel recently, and it has been 100% correct. I'm going to continue to show that to you in this video, but those of you that were subscribed, shout out to you. None of this should be taking you by surprise. And I want to show you a few different ways that we can actually kind of understand this. And the first way is just by looking at, see, when you bounce off the area of support, this doesn't count because we were actually breaking resistance here, but when you bounce off support, how long does it take to revisit that area again? On the first occasion here, the first two hits had a 14.5-day gap. The next one had a 24-day gap. Those were two very big gaps, right? You're talking 2 and 3 weeks respectively. Very respectable time frames for the price to come back down to support. That's okay. The next one, obviously much shorter, 3 days. After that, 1 day, and after that we're already coming back down, and if we just see another 1 or 2 days of dumping, this is going to be about 10-11 days and we're back down to support again. That's the first way you can judge this. How quickly do you return down to support? If you continuously return down quickly, and if your returns become more frequent, that is a strong sign that the support will eventually collapse and you've got to start looking for support at significantly lower levels. In this case, it's significant. In other cases, it might not be. The reason it's significant here is because if we look at price history, there's just not that much trading that has ever taken place between this yellow line at 61k and this yellow line at 52k. Bitcoin just doesn't usually trade in this range that much, and we can see that very clearly. You know, when we broke it over here, it was a pretty quick move up and a pretty quick move back down. We stayed above the line for a total of about 6 days. On this occasion here, very same thing until we came back down to it again. You know, we're just not spending that much time in this range. When we first broke up, we didn't even use any resistance in the range at all. So typically when that happens, if you don't use any resistance on the way up, you can't expect support on the way down as well. So we'll get to that in just a second as well. Thanks for smashing those likes if you are excited, ladies and gents. And of course, do definitely keep in mind that you've got phenomenal offers linked down below if you want free trading capital that these exchanges give you. Bybit is going to give you up to 30k for free that you can trade with. That's money that they put in your account, and any profits you generate are yours to keep. And BingX is a phenomenal no KYC alternative. So you can do the same thing with BingX. They're giving you over $100,000 in bonuses, but they don't even take a picture of you or a picture of your ID for you to trade and deposit and withdraw and everything like that. So that is super, super cool. Very flexible exchange. You have access to traditional finance as well. Definitely one of the best in the game right now. Check them out with the link in the description if you like the idea of all that free cash to trade with. If we bring it back to the market, the second key way that we can actually see how weak this market is by looking at the bounces. Again, we've looked at all of this before, but I will repeat it because it's super important. There's 2 key factors we're looking at when we're looking for bounces. The first key factor is how quick are the bounces. The second key factor is how high do the bounces go. If we take a look at the first one here, this was a 16-hour 14% rally. Okay, within 16 hours, it went up by about 14%. You could say, yeah, it's about 16, 20 hours, right? Basically around there. On this occasion here, the first move up takes place again across about 16, 20 hours, and it's a 12% rally. Pretty healthy, right? We're moving up by double-digit percentage points, and we're doing it within less than a day. Within 1 day cycle, actually. Pretty good. On this occasion here, from our bounce to our high, this was a 10% pump, but it takes about double the time. Am I saying that right? Yeah, I am. 1.5 days. We're moving up by less, and we're moving up a lot less intensely. The next time from low to high we're moving up, and if we're looking at similar time frames, it's, you know, about 1 day later we're up by 7%, about 2 days later we're up by 10%, 5 days later we're up by 12%. It takes 5 days to match what we did previously in 16 hours. This is a very, very strong sign that overall we were producing. And by the way, these pumps went much higher, right? This pump took us up to our actual all-time high. This pump took us up very close. You know, these two, you know, these were the actual tops, and the market didn't actually go higher than them. So really not good signs, ladies and gents. Definitely not good signs. You know, one of the other things I told you guys is that we need to start punching in higher highs, right? We've been setting lower highs in this trend the whole time. We need to start punching those highs a little bit higher, right? So this was the key level to break. This was also a key level to break. We definitely broke this one with ease, but this one we didn't really break very well. You know, if you go ahead and just kind of drop a line at that previous high, we did get a couple of wicks, but there was nothing significant here. This is not a break of our previous high, which to me means that this is now a double top. So we've got a little double top forming in this market here. There's a lot more I'll show you as well. And by the way, this is not a purely negative video. You're actually going to see in a few minutes when I get to it, there is an extremely strong bullish sign on this market, and it's actually really exciting. It's something that I personally take very seriously. So I'm pretty hyped up for that. If you are, definitely make sure that you smash those likes up and double check that you're subscribed as well. Obviously, that stuff goes super far for both you and I, because you don't miss out on this amazing content, and I get numbers that go up, so that's pretty cool. But yeah, so we're producing weaker bounces, and you know, it goes deeper than that. You know, if we take another look at how this is looking as well, you know, again, it's just we're coming back down into the bottom of the range. We've got our support now at about $62,000, which is, you know, more or less where we are. We're a little bit higher than that right now. You know, you can obviously draw lots of different support and resistance areas on this chart. You know, and what we also have developing now on smaller time frames is lots of resistance above our heads right now as well. You know, areas that, you know, we previously got rejected at, like, you know, the areas I was just talking to you about. This area now has an Ichimoku cloud here offering resistance on the 1 hour. So, you know, if we go ahead and take a look at that, we're also going to start to see that, you know, like previous areas that we were kind of struggling at, they're going to be much harder to overcome now. So that is also important. We've already seen this on the 4-hour time frame as well. It's not particularly often that the 4-hour Ichimoku cloud is in exactly the same place as the 1-hour Ichimoku cloud, right? Take a look at this. Right there. 4-hour Ichimoku cloud overlaps with the 1-hour cloud. You know, it's confluence. What we're seeing is that across different time frames, the same indicator is telling you the same thing. You're even seeing different indicators telling you the same thing. Look at the 4-hour EMA ribbon. You know, it's in the same place. If we put the Ichimoku cloud back on, here we are. You know, it's the same general resistance area. If we put it on the 1 hour, it's right in the fucking center. You know, so there is confluence here across different time frames, across different tools, and they're unrelated tools. You know, EMAs and Ichimokus are completely different indicators, and that's why I use them. You know, one thing that I find a little bit silly that, honestly, you know, you probably might even be making this mistake up to now, you know, and I sure did as well. It's nothing to be ashamed about, is that you use indicators which kind of do the same thing slightly differently. You know, they might have a small difference, but they're not actually that different. For example, RSI and MACD, brilliant example. Very common beginner duo that people use as indicators, but they're both momentum indicators. And, you know, for me, first of all, I don't want to use that many indicators because they're actually not that useful, especially if you can analyze the way I'm showing you right now. You'll have complete clarity of what's going on, and you won't even, you know, we didn't put a single indicator on this chart until like 7 minutes into the video, and you already understood much more about this market by 7 minutes in than most people ever would. And by the way, people are like, you know, your videos are too long. Dude, the videos are as long as they need to be. If you don't like it, I'm not talking to you. You know, I mean, if you don't have time for this, then go. You know, I'm talking to the people who have serious money in this game, who have time to put into it. And if that's not you, then that's your fucking problem, dude. But I don't operate like that. I consider my decisions carefully. I think about it the way I'm telling you guys. And you know, and that's because the money is important to me. You know, I'm gonna put some time into it. It's really not a big ask. So, you know, it's not gonna change. The videos are gonna be as long as they need to be, or as short as they need to be. You know, nothing gets forced here. But you know, here's the thing, like, you know, we're starting to see that kind of resistance mounting up here. And then just actually back on the note of the indicators, you know, I don't like to use too many because the normal analysis that I show you is great. But also, if I'm not going to use too many, I need to pick them carefully, right? So I don't want to use, like, you know, the same thing. It's like going to the gym and all you do is chest workouts. And then you think that, you know, you're going to have a developed body. You're going to have a strong chest, but the day you need to pick something up off the ground and it's really heavy, you're going to have no back support. You know, you're going to have weak legs and you're just going to collapse. And in trading, what that means is you're going to lose money. So it can be very dangerous. Now, here's something interesting. We were trading in a rising wedge and it traded right up into 65K resistance here. I'm sorry, 67, 68K resistance here. And the speculative target of this wedge drops down by 7% from the breakout point, which puts us right in the $61,000 price range. We haven't reached that level yet. We have fulfilled most of this target, so I think it makes a lot of sense that given how we're already on track to reach this target, we're probably going to come back down and tag it, at least. You know, maybe we get a pump from there, and I'll talk to you guys about that in a minute, but at a minimum, you know, I have to expect that we come down to that 61.8K level, you know, just into that general kind of range. Now, here's the other thing. If we do end up coming back down to the bottom of these ranges, these are still support. And, you know, it's not something that I would be looking to short because support is where the price bounces. And even though I think it looks weak and it's going to roll over, I'm saying this more from a perspective of I'm not buying anything yet. You know, I think I'm going to get better prices. It's not because I want to sell or anything. You know, I think the cost of selling is too high. You know, I would rather be in and lose 10, 20, 30, 40%. You know, I'm very prepared to lose 40%. Most of you aren't, but you need to be okay with that because that can happen. It's actually very normal. I'm very prepared to lose 40%, but I'm not prepared to take myself out of the market. Because if this thing does rally, you know, a 40% loss is going to look, you know, like a pretty small cost in terms of, you know, the 200-300% upside that you've missed out on because you sold. So I'm not saying that it's going to go up. Obviously, I've never been your financial advisor and I won't become one. But that's what I'm doing. And that's been my approach. You know, even though I think the support is going to collapse, it's not like I'd necessarily take some action on that in particular, but there is action I would take, and I will tell you about it as we continue. That said, it is still support, and we do have a trend of producing weaker bounces, so it could just be that we fall into this kind of range here, and then, you know, it's another rise back up into where we're finding support right now. You know, we flip that and turn it into resistance, and then maybe we collapse down, right? There's a lot of different ways it can happen. I have shown you this before, but I want to show it to you again because it is such a captivating example of exactly what I'm talking about, and it's so relevant. You know, it's exactly what we've seen before, where Bitcoin was trading in this beautiful descending resistance channel on this chart here. And what we had on the chart at that time was a very, very similar setup, where originally we had nice, big, spaced out gaps of our support area. On this occasion here, it was 80 days. On this occasion here, it was 54. From here, it was 70. But then suddenly it starts getting a lot closer. It starts becoming a lot more local. It's a very similar situation to now. Nice, big separation, followed by getting a lot faster here. These are your signs that collapses are coming. I traded this collapse. I saw it coming. I was able to make a 60% profit, which is bigger than the actual drop, which was absolutely sick. And of course, that wasn't enough. I did trade this on the way back up as well. For at the time, it was one of the biggest percentage gains of my life. So that was super cool as well. That was over 300% profit on one trade alone. But the point is that these are the same patterns. We did this with the descending triangle. And by the way, there's another example right here on screen. We did it with this ascending triangle too. It's just a characteristic of the market. This is why it works so well. All we're doing is reading body language. I'm not doing any voodoo fucking black magic or like reading the moon for analysis or putting on all sorts of fucking autistic indicators on the screen and shit like that. That's not my game. That's not what I do. I'm literally just saying, hey, look, before it was taking a long time to get back up into this range. This one, it is still not that quick. It's not that slow. But the other main factor is that it was producing big resistance drops off this level. And those big drops stopped. You know, over here, especially here, this last bit here, there was no more resistance in this range. We were getting very close up into this range, but we just weren't getting rejected. Over here, we just weren't getting rejected. And if you're not getting rejected, or in this case up here, if you're not getting bought back up, then you know that the collapse of your ceiling or the collapse of your floor is probably on the way. You know, that's how you can tell. And that's why this stuff is so powerful. You can start to see that the market does not care about where it is. It's not bouncing where it should be. It's not reversing where it should be. Well, then the ball is in the court of the bears. That is something which I think is very important and can, you know, maybe hopefully save you a lot of money, make you a lot of money in the future. It's a principle that has served me very, very well. Here's a look at how this could happen. If Bitcoin does end up falling below that area of support, I'd love to see a back test, and you know, that would potentially lead to a really nice low 50s target. I'm seeing a lot of targets from people like 55, 56, 58, 57, just basically any number in the 50 range. I personally don't know where these people are getting their numbers from. It just doesn't make sense to me. This chart on screen is very, very clear. there is no fucking consolidation on the chart until you look down at the 52k level. There's nothing. So I don't know how you can just pick a completely fucking random point and then say, yeah, this is the bottom. It just sounds silly to me. I just don't understand how that can be a conclusion someone arrives at. But people have these conclusions. I think they're wrong. And I'm looking at 52k because prices tend to bounce off previous consolidation zones. They tend to bounce off previous support or resistance zones, and this was obviously a resistance zone. So and by the way, it was actually Bitcoin's first resistance zone when we were setting all-time highs. If you take a look at this here, this is the my bad, actually no, it wasn't. What am I talking about? Where's the 52k area? Yeah, no, it wasn't, my bad. The 52k area produced very minor resistance here. I mean, we stopped for 2 days, but I don't know. I don't really think that counts. And it did produce really nice big rejections here and reversals across the board. It was a huge reversal point here. I think that might have been what I was talking about. And this actually resulted in a huge 25% drop in 2 weeks, which is, you know, a big drop for a 2-week time frame. So, you know, that's what we've got here. That's what we're playing with. That's our area of support. And that's how I think this thing could end up playing out. By the way, if it goes bullish, if it goes the other way, then we've just got to overcome this resistance. Our point to break on the 4 hour is going to be 66, but I think more reasonably it's going to be the previous high at about 67. As long as we can get above this high, we're good. If we don't, then, you know, it's potentially even worse. It's potentially going to be a triple top, but I don't know, triple tops, I don't know how common they are. You know, but you know, if it does become a rejection, then I just don't really see how this thing can recover. But more reasonably, I think if it does get back up there, it's probably going to be able to break that high, and then that's it. You're probably looking at all-time highs. So that's cool. It's just that there's a very, you know, rocky, you know, storm ahead for Bitcoin if it moves up, but it's actually pretty clear to drop right now. Like, I mean, it's got clearance to drop, basically. You know, there's a lot of factors that are giving it you know, that are giving it a reason to drop, and not many, I think, that are pushing it higher right now. So especially, you know, the halving's done as well. I just think it makes sense. Like, you know, these narratives have kind of played out, and that could be something which Bitcoin you know, just uses to kind of roll over with. We've also got Ichimoku support at the 618 retracement here. I'm sorry, Fibonacci support at the 52k level with this 618 retracement, so that's definitely interesting. And you've already kind of seen me tease it, but we've got the Ichimoku cloud too, and this is that really bullish thing I mentioned a little bit earlier on in this video. We are looking at, you know, a huge falling wedge pattern after a really big uptrend, and it's lining up with phenomenal daily support on the Ichimoku cloud. This is actually a really bullish sign to me, and just the first target, if you extrapolate it from this high here, puts us at $82,000 from a potential breakout point in early mid-May. So there's some real promise here. You know, this actually looks really good, and it would be uncomfortable to break the daily Ichimoku cloud. You see, the problem that would happen now, because we've spent so long consolidating, the problem we would have if we drop is that, okay, let's say we get down here and then we start bouncing up, which, by the way, I don't think this is necessarily the floor. I still want to see $44,000 because that would be the maximum 40% correction for Bitcoin, and that is actually a very nice number that Bitcoin hits in terms of corrections when it does end up correcting in a bull run. You know, 40% is the maximum acceptable range to drop, and it also lines up with a really nice area of support, and it's also it's the second area of support. There's only this one, and then there's this one, so you know, it just makes sense. You know, but regardless, let's say it does either of those things or none of those things. Maybe it just drops down to here and then comes back up. The problem is that all of this, which we're finding support in, is probably going to be resistance. And not only is this going to be resistance, the next blocks of trading are going to be resistance. This line is going to be resistance. This one's going to be resistance. 67, 68 is going to be resistance. You're just going to keep running into it over and over and over if you try and break back out into this range. And that is the inherent risk that this market is going to be faced with. And at this point, I don't really think it's avoidable. You know, I think it's kind of too late. The fact that we've traded here for so long, you know, since we entered this range, it has now been 60 days. That's 2 months. You know, I mean, that's 2 months of price history building up in a range which we've previously never really traded in for that long. You know, it is understandably probably going to become resistance. And so that's something I'm going to keep an eye out for. But I don't, you know, it's not something I'm worried about. Like, these are just things that would make scared people sell. You know, what would end up happening in these situations is that you drop down to 52. You know, you've been watching Bitcoin do nothing for 2 months. You bought it up at the top because, you know, you're a fucking Reddit trader. And after 2 months of waiting, it drops. You know, it's going to be your reason to sell. And if you decide not to sell, but you see the price come back up, you're going to sell here because you're going to be like, well, at least I got close to my entry, but there's resistance now, so I'm going to sell. And then you're out of the market thinking that this is going to happen. You know, and it very well might, by the way. I mean, if that is what happens, it would be so healthy for the market, you know, to come down here and then do it all again. And then this would be the real rally. That would just be super nice. But I don't know if the market's actually going to give that to us. But don't rule it out, because when it rains, it really does pour. Like, people act like, you know, Bitcoin just never does anything nasty to people. You know, when it's in a bull market, people act like Bitcoin's just always fucking perfect, always smells nice, always done up properly, always fucking in a good mood. No, man, no. Bitcoin's like Bitcoin's pretty brutal. You know, Bitcoin has its way of fucking your life up, fucking your world up, for sure. So that is something I would definitely keep in mind as well in this market. It goes a little bit further. The S&P 500 saw a pretty big move up actually on Friday. It was a big gap up, and the reason that's important is because Bitcoin didn't follow. If we look at Bitcoin yesterday, it was just dropping, and that's on a day where the S&P 500 was displaying strength. That's obviously pretty concerning, right? If the S&P 500 is looking strong, then you know, typically, and if typically Bitcoin traces it, well then it's not doing that right now, and so Bitcoin's being given a reason to move up, but it's not moving up. You know, when you don't respond to bullish things by doing bullish things, it means that you're weak. You know, again, it's just signs that the market is giving us that. You know, it doesn't mean that, you know, collapse is coming. Obviously, you know, it can be pulled back, but you know, it certainly doesn't mean that there is an abundance of strength, and that I think is important. We've seen Ethereum really shoot up here against Bitcoin, so that's pretty cool. You're right there, bro. We've seen Bitcoin really shoot up there. I'm sorry, Ethereum up to the 0.51 level. I don't think this is anything to read into. It would be cool to see it flip above this area, but I just don't see that happening. And I think this is going to be another, honestly, a nice exit, I think, you know, before it does continue to move down. I don't necessarily think I'd exit here if I was still holding, because, I don't know, what if it does go back up? You'd just be so bitter. But I'm not holding Ethereum, and I think it's going to drop from here. I think it's going to get weaker again. I think Bitcoin's dominance is going to shoot up again. Bitcoin's dominance is basically just falling back down to retest this box. That is beautiful. That's the best thing it could possibly do in order to shoot back up again later. It would probably happen if Bitcoin crashes below 60K. Other altcoins, I do want to take a quick look at Solana. Solana is now back up in this resistance range of the $142 area. Quite an important resistance range. It's already dropped down by a fair bit, so could be getting ready to capture a little bit of resistance here. Definitely an interesting short, you know, and also again something very, very tradable on exchanges like Bybit and BingX. Again, BingX is not a KYC exchange, so you can use that with complete flexibility. Your privacy is respected here, so definitely check that out. You get over $100,000 in bonuses on BingX when you start trading using my link below. Pretty good setup here, I think. You know, just you know, down to the next area of support, that's 10%, and maybe a stop loss above this thing here, it's 4%, so whatever. 5x leverage, that's still a 50% profit on the downside, so pretty good, pretty clean. You know, it's obviously an important area of resistance, so that is something I'll be watching. That is gonna be all from me today, ladies and gents. If you have enjoyed this one, you know exactly what to do. Smash those likes up. Make sure you are subscribed to the channel and taking advantage of your phenomenal offers that are available for you in the description below. I haven't made videos for a while because I was very sick, and I'm still kind of sick. I don't actually know why, but interestingly, a lot of people in Dubai suddenly got sick in the last 1 or 2 weeks, and I was one of them, and this was one of the worst sicknesses I've ever had. It was just a flu fever thing, but pretty much better now. I don't know if it was just like something going around, because Dubai had a fuckload of events in the last few weeks, and it's just so easy for, you know, someone to fly in and it gets passed around, or if it was something else, you know, I don't know, but I'm very glad to be back in the game, and yeah, we've seen from me a little bit more. I'm glad that nothing broke while I was gone, and hopefully we get some volatility so I can do some more live streams with you guys, because I really want to do more live streams with you guys. If you want to see them, let me know in the comment section. Tell me I want more live streams, and that'll tell me just how passionate you guys are for it, and then you know, how much I should do them. All right, guys, thank you all for watching, and I'll see you all in the next one. Cheers.